of you might be able to some of you might be able to raise your hand, but we'll be watching the chat box. If you have a question, we'll gladly get to it. And again, if you have issues with connectivity, you can put something in the chat box or perhaps call back using just one of the options in the bottom there, switching to phone audio if you click on mute. Otherwise, we hope everyone will join us for the whole session. And I'm here to introduce Stephen Bishop, who is the director for North Carolina FarmLink in Western North Carolina, covering 45 counties. And he's put together this great little slide set to introduce folks or remind them of what federal programs there are, local programs and such. If you have something to add that might be relevant, again, put it in the chat box. We'll be sure to make sure everyone hears it. So Stephen, over to you.
Okay, let me see if I can share my screen here. So do y'all see the slide webinar housekeeping that's coming through? Okay, so we'll go ahead and get started. So like Noah said, my name is Stephen Bishop. I'm the Western FarmLink Director. And in 10 years of working with farmers, probably the question that anybody who works with farmers in like a government agency gets asked the most is about funds for farming and government programs for farmers. And the truth is there are a lot of programs available to farmers, but unless you work day in and day out in some of these programs, it's very confusing to keep them off straight and to know which program is offered by which agency, and they all kind of blur together. So just for example, here in North Carolina, we have the CREP program, which is CREP, and then we have CRP, and then we have CSP, the Conservation Stewardship Program. So those three programs sound very similar, but they're very different programs by very different agencies. And so the point of this PowerPoint is to just give you a brief overview of some of the different programs available to farmers. We're not going to go into a lot of detail on any particular program because most of these programs we could probably spend hours on. But the point is just to make you aware that the programs exist and give you a starting point where you can contact somebody to find more information about the programs if you're interested in them. But before we start talking about the programs, I do want to talk about the Schedule F. So if you're not familiar with the Schedule F, this is the form that you send in with your income taxes if you're a farmer. And basically you just list any income or revenue you receive from farming, and then you list your expenses. And if your expenses exceed your revenue, you can deduct that from your taxable income. And if you make a profit, you have to include that for your income for the year. But the reason this is so important for a lot of these programs is it's a qualifying document. So you'll have to show the Schedule F to qualify for some of these programs. And so we'll take a look at that here in a moment with some of the tax programs. So, with so many different programs, there's probably not an easy way to go over them all, but I tried to group them up into different categories. So the first program that we're going to talk about or the first programs are the tax programs. And so in North Carolina, the present use value program is a really important program. Hopefully most of y'all are already aware of this program, but it reduces your property taxes on farmland. And so the way it works is instead of being taxed on the fair market value of the farmland, which would probably be like the developmental value. So let's say $10,000 an acre. you would be taxed on the ag use of the farmland, which in most cases is, somewhere like $500 an acre. So if your county tax rate is 1%, it would be 1% of 500 instead of 1% of 10,000. And so it's a significant savings. And to qualify for this program, you have to have at least 5 acres of horticultural crops. So those are any type of like high value crops, blackberries, blueberries, vegetable crops, any type of nursery crops, anything that's not like a traditional row crop or field crop. So you have to have 5 acres of horticultural crops or 10 acres of pasture or cropland or 20 acres of forest land. And so that's the acre minimum that you have to have, but there's also an income minimum. So you have to generate at least $1,000 gross income per parcel. So that's important. It's just per parcel. It's not per acre. So it's not a very high bar to set in terms of income. But the way that you justify it to show that you're making that money is by that Schedule F. And so that's why that Schedule F is so important. So it shows that you're generating the $1,000 income. Now, this is a state program, but it's administered through the county tax offices. So you would have to visit your county tax office to enroll in it. And the important thing to know about this program, it's the tax deferral program. So if you enroll in this program and for some reason you get out of farming, you would have to pay back taxes for up to 3 years for your property. So it's best for people that want to keep their farm and farm use long term. If you're just trying to flip a property, it may not be a good fit because you'll just have to pay back taxes anyway. So this is the first program, the present use value program, and it's at your administered at the county level at your tax office. The next tax program I want to talk about is the sales tax exemption. So this exempts farmers from state sales tax for farm purchases for equipment or supplies. It used to be, I think, that this program, you only had to show $2,000 in income, gross income per year. But a few years ago, they changed it to $10,000 gross income per year. And so it's a little bit harder to qualify for. But if you're a beginning farmer and you haven't met that yet, you can apply for a conditional exemption, and you would basically have 3 years to meet that $10,000 threshold level. So there is a conditional exemption for beginning farmers. Now, this program is a state program, and to apply for this program, you would actually mail a hard copy application to Raleigh along with a copy of your Schedule F. And so this is administered by the Department of Revenue for North Carolina. So those are the 2 main tax programs that we have in North Carolina. They don't really give you a payment, but they help you save money. So $1 saved is $1 earned, and they can help you save a lot of money. So they're very important. The next programs we're going to talk about are mostly cost share programs. And I tried to break them down between the different agencies that offer them. So NRCS, if you're not familiar with NRCS, it's basically what was the Soil Conservation Service. They changed to Natural Resources Conservation Service, but they are a USDA agency. So they're part of USDA. And they have several cost share programs that can help farmers. The big one is the Environmental Quality Incentives Program. It's known as EQIP. And so this program, it funds a wide variety of different conservation practices. And so in the lingo of NRCS, they call these best management practices, or BMPs. And it reimburses roughly 75% of the cost. And I say roughly because they have a set rate for each different practice they pay. And depending on, and so it's a reimbursement. So if you do the work yourself, you can almost break even sometimes. But if you hire somebody that gives you a really expensive quote, it may only be, 50% of the cost. Also, with the way inflation is in the past year, a lot of the cost rates were set, a few years ago. So there's a lag between when the rates are set and the current prices for materials. So, but to apply for the EQIP program, you would want to contact your local NRCS soil conservationist. And in most counties, that they would be located in the USDA Service Center. And so they're often co-located with FSA, the Farm Service Agency. And sometimes there'll be other programs or other agencies there too. If you're lucky to be in a county where there's a joint ag center where all the agencies are together, that's great. But in a lot of counties, they're split up. So sometimes the best thing that you can do is just call your local extension office and ask where your NRCS office is, and they'll point you in the right direction. But the next slide here, it kind of shows you some of the practices they'll help pay for. So this would be a watering tank and a pasture. The point of this practice is to help fence cows out of the water body. So you can see there's a pond back there. So they would help pay for the fence. Now, in this case, they probably didn't help pay for the fence because they don't pay for board fences. But if you were to pretend that was a barbed wire fence or a woven wire fence, they would help pay for that. Then they would pay for the watering tank and the concrete apron and then the gravel that goes around it. And they would also help to pay for a water line and any type of water source like a well. They would help pay for that if you needed it. So help cost share with that. Another common practice is a high tunnel. So this is to help you extend the growing season. So the difference between a high tunnel and a greenhouse is this, just that a high tunnel is not heated, but the crops are planted in the ground. So they don't help pay for greenhouses, but they do help pay for high tunnels. This is a poultry litter shed. So the purpose of this is to help prevent leaching for when it rains, from nutrients from getting into streams. They help with cover crops and grass waterways. And they have a different cost rate for each one of these different practices. So, but there's a lot of other practices too, in addition to these. So probably the best thing to do would just to be contact your NRCS office and have them come out and look at your farm and see if there's anything that you would qualify for. The next program that we want to talk about is also NRCS, and it's called the Conservation Stewardship Program. And so with EQIP, they talked about best management practices, but with conservation stewardship, they talk about enhancements. And so they're kind of the same thing, it's just a different term, but the way the program works is a little bit different. So with EQIP, it is a reimbursement. So you do the practice and you get one payment. With Conservation Stewardship Program, it's a 5-year contract and you get annual payments. And so, and the way they calculate the payments, it's not based off a particular practice. It's based off of how many practices you do. And they have like this formula, and it's a little complicated, but this program is supposed to be for people who have already done EQIP and are looking to go to the next level with conservation. But to me, it seems like maybe there's a little more emphasis on wildlife with the Conservation Stewardship Program. So some of the practices or enhancements that they would help pay for, they do like pollinator plots. And they have a ratio depending on how big the field is, how big the plot has to be. They do like help you pay for wildlife openings in your forest land, for interseeding clover in your pastures, and then like planting native trees and shrubs that have wildlife value. So those are some of the practices that would help pay for with the conservation stewardship program. So those are two very good programs that are utilized a lot. And both of these programs, because they're NRCS, you're competing with people throughout the NRCS area. So usually it's 4 or 5 counties. So it is a competitive program, and they do rank applications to figure out who to fund. The next program I want to talk about are cost share programs through soil and water conservation districts. For those of y'all who don't know what soil and water conservation districts are, they're basically a local form of government that are overseen by elected board of supervisors. So if you ever go vote, you may have seen on there soil and water supervisors. So a lot of times these are local farmers who get elected to these boards to oversee the conservation offices, the conservation programs in the county. And a lot of times soil and water districts are like county, state, and federal partnerships. So sometimes the staff will actually work for the county, but they'll also be paid by the state. And a lot of times they work in federal offices. So it's all kind of combined together with soil and water districts. But they have a program called the Agricultural Cost Share Program, or the Ag Cost Share Program. And it's very similar to EQIP. The only difference is that where EQIP focuses on natural resources, Ag Cost Share focuses only on water quality. So with Ag Cost Share, you wouldn't be able to apply for a high tunnel. But a lot of the other practices like fencing cows out of the creek, putting in watering tanks, poultry litter sheds, grass waterways, you could apply through Ag Cost Share for it. Now, the thing about Ag Cost Share too, that's a little bit different, is that the farms must be at least 3 years old. So the operation must be at least 3 years old. Whereas I think with the EQIP program, it only has to be 1 year old. So that's a little bit different with Ag Cost Share. And again, it reimburses roughly 75% of the cost for the farmer. Another thing that's different with the Ag Cost Share program is, so every county gets a set allocation for that county during the year. And you're only competing against the farms in your county for Ag Cost Share. So you're not competing against as many farms throughout the whole area or region. Now, there isn't quite as much money in Ag Cost Share, so it still can be difficult at times to qualify for the contract. But you can always put your application in and see if you do. So to apply for this, you would just contact your local soil and water conservation office. A lot of times they're co-located with NRCS, and you could ask them to come out to your farm and look at your farm to see if you would qualify for the program. Another program through soil and water districts is called AgWrap program. And for those of y'all who are old enough, you may remember that Soil Conservation Service, a long time ago in the 1960s and 70s, they used to build a lot of ponds. And eventually they got rid of that program. Well, in the early 2000s, the state legislature here in North Carolina decided they wanted to recreate that program because of droughts. And they wanted to increase on-farm water quantity or on-farm water storage. And so this program focuses on water quantity, and the big one being ponds. And so it helps farmers pay for ponds for irrigation or for livestock watering purposes. And it used to be that you could let cows, in the 60s and 70s, you could let cows into the pond to drink. Nowadays, they make you fence the pond out and you have to pipe the water to a watering tank of some sort. So it's a little bit different than it was. But the way this program works is that the ponds that rank the highest for funding are the ones that use the most water. And so a lot of times it's going to be the irrigation ponds that are the ones that get funded because they use so much more water than a livestock watering pond would. But if you're interested in building a pond, you could contact your soil and water office. They do also have a limited amount of money for other practices, including wells and sediment removal in ponds, and then micro irrigation systems. So you could also look into those practices. So the next program is another soil and water program, and this is the Conservation and Reserve Enhancement Program. And so this program, the purpose of this program is to protect streams. And the best way that I know how to explain this program is it's almost a combination between a cost share program where they're helping you fence cows out of the streams like ag cost share, but it's also got an easement involved with it as well. And so for easement is basically just where the government has bought the developmental rights so the property cannot be developed. And so it is to protect the property and protect environmentally sensitive areas. And so with this program, you would get an extra easement payment if you did a 10, 15, or 30-year or permanent easement. And the payment goes up the longer you do it. So if you do a 30-year easement, you would get more than a 10-year easement. You would also get a lump sum payment if you did a 30-year or a permanent easement. The only thing about this program, though, is it's only for the Piedmont and eastern part of North Carolina. Unfortunately, if you're in western North Carolina, it doesn't apply to us for some reason. So I think maybe there's some talk of expanding it to western North Carolina. So hopefully in the future, they'll do that. So those are the soil and water cost share programs. And this is just an example of a pond that was built through the AgRAP program. So here are blackberries on the hillside that are needing a bunch of water. And so they're using this pumping system to irrigate. And it pays a pretty good amount. So it's up to $25,000 for a pond. The next cost share program is through Rural Development. They are another agency within USDA. And a lot of times they are, again, co-located with NRCS and Soil and Water. But the Rural Energy for America program is called REAP. That's the acronym. And it focuses on projects that increase energy efficiency. And the one that is probably most used is, it's mostly used for solar panels. And it pays up to 25% of the cost for solar panels. So it doesn't pay as much as some of the other cost share programs. But if you're going to go ahead and put solar panels in for your farm, it may be worth looking into. And when I say solar panels, I mean for your own personal or own farm use. It doesn't help pay for like big solar farms. But I've heard that the application process for this program can be kind of difficult. So if you're in Western North Carolina, there's actually a nonprofit, Mountain Valley RC&D, that can help you apply for this program. That they work with rural development to help farmers apply for it. So those are the main cost share programs. Now we're going to move on to FSA programs. And we could spend all day talking about FSA programs. There are so many different FSA programs, and there's so much money that goes through FSA. But we'll talk about, just a broad overview of their programs. So, historically, I think FSA is kind of thought of as the commodity support office, or that's where farmers would go to get, payments for their row crops or field crops. They still have some of those programs. So they have a price support program. So any type of field crop, corn, soybeans, wheat, cotton, if the price drops below a certain set rate, then they will come in and they'll get a payment to help compensate them for the price dropping below that. So that's based off of the price. They also have, more insurance type programs, disaster assistance programs, where if you get like a hard freeze or something that destroys your crop, you would get a payment because of the loss of production. They also have crop insurance for non-commodity crops. So, your high value crops, tomatoes, any type of vegetable crops. And it's basically, just like a regular insurance program. You would pay $325 per crop. If you have a lot of different crops, the most you can pay though is I think like $800. So if you're a small farm and you got to the point where you were worried about crop losses, and you're so big now that you couldn't self-insure your losses, it would definitely be worth looking into. That program is called NAP, the Non-Insured Assistance Program. They also have like other types of disaster assistance programs where, like here in Cleveland County, we had a tornado come through, and it blew down a lot of trees, and it blew some roofs off of barns. And basically the farmers had to turn in receipts for the fence work or for the roofs, and they've got a payment to help them pay for that. We've had some droughts in the past where if the drought lasts long enough, it would trigger a payment. So you would get a certain amount per head of cattle that you have. When coronavirus or COVID was going on, there was lots of payments that went out as a disaster assistance for that. So they have lots of disaster assistance programs. They also have loan programs. So if you're a small farmer, one of the newest types of loans they do are called micro loans. And it's anything less than $50,000. And there's a simplified loan process to it and it comes with a pretty low interest rate. And then another program that they're well known for is the Conservation Reserve Program. And so this is the program that takes land that has a cropping history and takes it out of production for either putting it into trees or putting it into some type of wildlife planting. And so if you're interested in doing either of those things, it's a very good program. So that's just a brief overview of the FSA programs. So your local farm service agency, you can call them. Another thing about the Farm Service Agency is also where you get your farm and tract number. So the farm and tract number is just an identification number for your farm for federal government purposes. But that number is used to apply for a lot of these other programs that we've talked about. So that's where you would get your farm and tract number. And so the last programs that I want to talk about are the conservation easement programs. And in the last few years, it seems like the conservation easements have really gained in popularity. I know here in Cleveland County, there's been a lot more farmers that are applying for easements. And basically the purpose of a conservation easement is to protect farmland from development. And it's a way to do that permanently. So whoever buys your land in the future, it's going to remain a farm. And so the easement is recorded on the deed, and it follows the deed with whoever buys it. And so it used to be that farmers, if farmers wanted to do a conservation easement, they were basically just donating the developmental rights to a land trust. Well, now the state and federal government are actually buying the developmental rights. And so the way it works is that there's the North Carolina Agricultural Development and Farmland Preservation Trust Fund. They have money set aside to buy easements to protect farmland. And so the land trust will help farmers apply for these easements, go through the application process, and they will help. So the way you figure out how much money you're going to get for these easements is you basically subtract the fair market value for your farm. You subtract the ag value or present use value from that, and that's how much they're going to pay you for those easements. Now, if you just get the state funding, it's about 75% of that value. If you go ahead and get the state and federal, it'll be closer to 90% of the funding. These are, I think easements are a good tool if you're interested in protecting your farmland. Another way I've seen them used too is that a lot of times maybe farmers haven't, they don't have a traditional 401k or IRA or something like that. So they'll use a conservation easement to get a big lump sum payment that can help them with retirement. So if you're interested in a conservation easement, the best thing to do is to contact your local land trust, or you could also contact your local soil and water district, because some soil and water districts are now doing easements as well. And the final program to talk about are just the stream mitigation easements. These are a little bit different from the easements we just talked about. The ones we just talked about were for the whole farm, but these are just for the area around the streams of your farm. And the way it works is they're used to offset the destruction of streams or wetlands somewhere else. And so let's say a big company comes in and builds a development somewhere. The developer would have to offset any streams that were destroyed in the process by improving streams somewhere else. And so it's not really government money that's being used to pay for this. It's private money, but the North Carolina Department of Environmental Quality runs the program. And so again, these are permanent easements, but it's just for the buffers around the streams. And so to apply for these easements, there's really no application process. It's through a third-party engineering firm. And so you would have to find engineering firms that do stream mitigation easements and contact them and say you're interested in them. But it can be a huge amount of money depending on how much stream they're improving. But here's just a picture of a stream mitigation project. And so they would not only protect the area around the stream, but they would come in and improve the stream banks and take it back to a natural condition. And so the money is used to pay for all this restoration work. And then the farmer also gets a big lump sum to keep this area from being developed around the stream. So and a lot of times these are based off of watersheds. So if you're like if you're in the Broad River watershed, there would have to be developmental projects going on in that watershed for there to be money available for these easements. So those are basically all the programs that I went over very quickly. If you have any questions, feel free to put them in the chat, and we can talk about them here. This is just some general tips for government farm programs. get to know your local staff. So get to know your local soil and water folks, your FSA director, your extension staff, because as you can probably tell, there's so many different programs. It's hard to keep track of what's going on with the different programs. And so if you know your local staff, you can get better information about, when the funding periods are for which programs. Unfortunately, a lot of these programs, the websites that go along with them are very convoluted and not easy to follow. So the best thing to do is just to talk to your local field staff. Also, a lot of these groups have newsletters. Like I know Soil and Water, a lot of the districts have newsletters, and then FSA, they send out I think a monthly newsletter. And then also with all of these programs, you've got to be patient. So it's a lot of times it's a waiting game. And if you don't get funded the first year, you may get funded the second year. So it just depends on all the different rankings and that type of thing. And there's a lot of paperwork that goes on with a lot of these programs. So, if there's a deadline coming up for a program, if you go in at the last minute, there might not be time to get all the paperwork done. So, just keep that in mind. Remember, there's no such thing as a free lunch with these programs. So, like a lot of the NRCS programs, so if you sign a contract with them and then you don't do the practice, well, even though you didn't do anything, they're still going to come back and ask you to pay back a penalty for not doing anything. Or let's say you do a cost share program with Soil and Water. A lot of the practices have a 10-year maintenance period on it. So if you get out of farming in 10 years, you'll have to pay back a prorated amount. So, just be careful. If you don't really need the practices, it may not be worth, doing them because it may be more trouble than it's worth. And then another thing is, don't necessarily go in looking for money, but go in looking for money to solve a problem. So if you got erosion on your farm, go see if there's any programs for erosion or to improve the stream banks or on your farm. That will make it easier for the staff to kind of find something to help you with, a program to help you with. And then this right here is just a little cheat sheet that I can send out to everybody. But it just kind of breaks down where all the agencies are federal agencies, which ones are state agencies, and the different programs. But I can send this out to everybody after the presentation, and if this would be helpful. And so that's basically all I've got. So if there's any questions, y'all can put them in the chat, and we can, try to answer them. So.
Stephen, there's one question from Tamara. Because you're talking about federal funds and state funds, are you not going to cover local funding streams like the county boards who make grants for farms to put in a walk-in cooler or high tunnel or wash pack shed? Who do we see to apply for those? Do you want to take a first step?
Yeah, so these are mostly state and federal programs. I guess there could be programs locally to some counties that, so I don't, off the top of my head, I don't know of any of those types of programs. So if you know of any of those programs and you want to, let people know about them, we'd be glad to hear about them. But
I know we have Orange County has a grant program, and I believe Durham started one. We'll try to put these together along with the other federal and state sources and get them out online along with the webinar here by the end of this week. Anyone online have information on other counties that offer grant programs, please put it in the chat or unmute yourself and share, please. Still got time for more questions in general. The follow-up from Tamara was Orange County had, but FSA and Soil and Water Department didn't know who to talk to. If you Google those through economic development here in Orange County, and it's a review board made up of the Ag Preservation Board and some other staff. I can follow up, or you can chat with economic development. It's in their website if you go look for grants. Thanks, Tamara. Any other questions, comments? We did have a lot more folks registered, and we'll be going over the recording, making sure it's okay, and if it looks good, we'll mount that on the website. Encourage you to stay attuned of what's on the NC FarmLink site in terms of both farm seekers and landowners, as well as the web pages that we offer in terms of resources for farm seekers and landowners.
Noah, do you want to put a plug in for the farm succession training, since we've got some farm credit staff on here and
sure,
extension agents?
When is that webinar, Stephen, again?
I think it's August 10th at 2 p.m.
Okay, so August 10th at 2 p.m., we urge you to join us for a webinar that will describe the 2.5-day farm succession coordinator training that we're going to have take place in Cleveland County, Shelby, this fall, November 7th to 9th, is that?
That's right.
So put that in your calendar, and we'll put notice again for all the agents and farm credit staff involved, but it's open to any kind of agent, any kind of professional ag personnel who work with farmers and have the opportunity to help guide farmers through succession stages. More than anything, we want to make sure that farmers have options when they're ending or getting to a place in their life where they want to move out of farming or do less farming. We offer some of that through the website right now, but this succession planning is much more targeted effort and deals with soft skills involved with how to assess situations that are nearing succession and give people options, encourage them to make sure they're, so to speak, farm is in order, financially, documentation, so that those resources and information can help outline a way forward. And in some cases, it involves issues of how to divide the asset equitably and fairly between family members, those who are at the farm perhaps still, and those who have moved away. So it was a real good training. I was part of it in Virginia this spring, and the same a couple of professionals from the Midwest are coming down to do this training for us. If you are an agent, we do have some SARE funding available. So if you're an agent with extension, we have actually a $250 discount if you apply early. And for other ag professionals, at this point, we have a $100 discount if you apply by, registered by the deadline, which is shortly after that webinar, having August 10th, Stephen?
Yes, 2 p.m.
Yeah.
So,
a question from Gina. Do you have resources or listings, resources for nonprofit grants for farms? I know they change often, but any good lists of these? At this point, we casually refer to them, but as a part of this webinar and the page we'll have up, we'll put together what nonprofit grants we know of in this web resource that we'll put online. Right now, I know for Western North Carolina, ASAP Appalachian Sustainable Ag Project has probably the best list in the county, in the state, putting those together, but they do only address the Western counties. But thanks, Gina, for that suggestion. We'll do our best to make sure we include those nonprofit grants.
Well, if there's no other questions, thank you all for attending. And if you come up with any other questions later on, feel free to email me or Noah, and we can be glad to try to track down the answers. So thanks everybody for coming.